Hello and welcome to this webinar. If you're watching this live, welcome and thank you for joining us live. I look forward to some questions from you later on. If you're listening to this on the podcast, then welcome to you as well. And maybe you're watching this on the replay. In any case, welcome and thank you for giving up your time. My name is John Denton and my business is called Business Ready for Sale. And I also have a business called Business Owners Taking Action. And I'll talk more about those a little bit later. So what I'm going to be talking about today is how to optimize your business, how to make it more valuable. And I'm going to focus on some of the less common things that people see value in a business, as well as the usual things, and talk about the saleability of a business, how to make it attractive to buyers. I will be talking about maybe, and I say maybe because people who are members of my Business Owners Taking Action mentoring group know that I'm not a big fan of sticking to agendas. But anyway, this is what I promoted when I was getting you onto the webinar. So this is what I'm hopefully going to talk about. Do you have a business or a job for life? Something that I talk about often, but it is important that you get that distinction and make that decision as well up front. How are most small and medium businesses valued? Again, I've covered this in a lot more detail in my half-day workshops and soon in my online course that's coming up. How do your financials look to a buyer? Again, something that's pretty fundamental but often gets overlooked. How to attract good buyers. I'm going to spend a bit of time on that and talk about, as I say, some of the less obvious values, the non-financial values in a business, and which businesses are hot at the moment and which ones are not. So, I am an engineer by training and according to my wife, by personality as well. So, I've been told by my coach that I put way too much into my sessions, but I love to give value and love to give good content. I hate getting onto webinars and sessions where 20 or 30% of it is a big sales pitch. So I will talk a bit about my services at the end, but I'll make sure there's lots of good content on the way through. So I will go quite quickly. Okay, so what's the difference between a business and a practice and why is it important? Well, a business is based around systems and a practice is based around an expert. So again, these are generalizations, but they typically hold true in most cases. And with a practice, I also include trades with that, where the expert is the tradie. And also franchises are a bit different as well. That's another discussion on its own. What's the pluses and minuses of business and values? Well, with a business, you can have pretty high startup costs, or you might be buying a business. You may have to invest in plant and equipment and fit outs and all this sort of thing. Typically, you have a team of people, you build up a team of people. But the big plus is that it has value without the owner. And if it's set up right, the owner does not have to be there all the time working in the business. And the owner's role there is to work on the business. But in a practice, the expert is the practitioner. You are it. You've got lower startup costs, probably. No team, or you can operate with a fairly small team, but it has very limited value without the owner and typically only sells to another practitioner. Now, there are exceptions to that. As I say, there's nothing right or wrong about either of them. It's just your choice, make your choice. And you can turn a practice into a business. I've worked with some practitioners to do that. So understand which one you're in and why you're in it, and decide what you want to do, whether you want to stay in a practice, make the money on the way through, or whether you want to turn it into a business, make the money, more money, when you sell it at the end. So how a business is valued, as I say, I do cover this off in a lot more detail in other programs and webinars and videos. This is the accepted way that small and medium businesses, anything with a profit of less than, say, 500 mil a year, how those sort of businesses are valued typically. The Australian Institute of Business Brokers, from their database, about 75% of businesses sell with this valuation method. So what do? We take 3 or 4 years of financials. Now, finalised accountants' financials is what we need. And PEBITDA is the proprietor's earnings before interest, tax, depreciation, amortisation. In other words, how much cash is the business generating for a single owner operator? And that's typically how it's done for going concerns, as I say, under 500 mil profit a year. Over 500 mil, then it's more likely to be EBITDA, earnings before interest, tax and depreciation, where it's running under management. So these are more likely to be under management businesses. We use EBITDA. Now, why 3 or 4 years? Because we want to see what's happened over that period of time and look at trends. Now, business valuers like Chris Milne of Jarrett Business Valuations and some of the brokers that I talk to on a regular basis are telling me we need 4 years now. Why 4 years? Because of COVID. So we want to look at the figures before COVID. What was the business doing to the end of the financial year in 2019? And what is it doing now? I think we're sort of post-COVID. So after COVID, so financial years 2022, and compare 2022 to 19 and see what the difference has been. So, as it sort of tracked on a similar trend, because the point is a lot of businesses did very badly through COVID and have now got back to normal, hopefully. A lot of them are doing better. But some also got a sugar hit from COVID, excluding any government handouts. For whatever reason, they did better during COVID. And so now they've gone back to normal. So we look at 19 all the way through to 22 and take an educated decision on the figures during COVID. So that's why we're now asking for 4 years. Then we apply an ROI, a return on investment factor, which a lot of accountants people call a multiplier, which is effectively what it is, but it's how much return on investment will the buyer get per annum, depending on what they pay for the business compared to the profit that it's bringing in. Where does that ROI come from? It comes from basically doing research of what's selling, what's sold in the past. And so there are sources that I go to get that information, and I talk to brokers and Chris Milne, the business valuer in town, and find out what businesses are selling for that are similar. Not that much different to putting a value on a house, really, except it's a lot more complicated. And then we calculate the gross selling price. So what does that mean? Excuse me. What makes up the value of a business? A business is valued, and the contract of sale will identify 3 parts to the business. Plant and equipment, so that's tangible assets. And this is really interesting because there's different ways to value the plant and equipment. There's replacement value, which is probably the most used one. What would it cost to replace that plant and equipment? There's depreciated value, there's auction value, and there's obviously new value, which is typically not used. A bank would use an auction value because they look at what they could get if the business goes broke and they have to auction off the plant and equipment. Depreciated value, a seller normally doesn't want to sell with plant and equipment value greater than depreciated. A buyer wants to buy it as high as possible because they want to depreciate when they own the business. So there's that value, there's the stock value, and that has to be saleable stock, and it's at cost into store before GST. What's the value of stock? And that obviously will fluctuate during the sale period. And then there's the goodwill. So having worked out what the gross selling price is, we deduct plant and equipment, we deduct the stock values, and the amount that's left is goodwill, if there is any left. Let me say at this point that some businesses can just be worth what the plant and equipment's worth. I did an appraisal on a business out in Malaga some years ago. They manufactured a food product. It was quite funny because they did a lot of baking, so they used a lot of flour. I rocked up there into the car park for the first time in my business broker's outfit. I got a charcoal grey, almost black suit on. As I pulled up, the owner pulled up with his van next to me and got out. And when he saw me, he started laughing, and he leaned on his van and laughed. I said, "Excuse me, what are you laughing at?" And he said, "You've come dressed like that, and we're going into a bakery full of flour." Anyway, I got his point. The reason I bring that up is that the plant and equipment far exceeded the goodwill in the business because they were only running it 4.5, 5 days a week, only one shift, and the amount of money that was because they wanted a lifestyle. But the amount of money that it was making and the profit that it was making didn't mean there was any goodwill in the business. So anyway, you can ask questions about that, or contact me afterwards if you want any more on that. So here's an example to make it obvious for you. If we work out that the adjusted net profit to the owner, the PEBITDA, is $200,000, and we decide that 40% is the right ROI for it, then the gross selling price is going to be $500,000. Take away the stock value, take away the plant and equipment value, and the amount that's left is the goodwill. And typically when a business is advertised for sale, it will be advertised at something like, in this case, 410 plus stock value, because the stock value can be different at the point of settlement. And there's ways of dealing with that. All right, so what's a buyer typically buying? A buyer is typically buying, excuse me, a money-making machine. So again, we're talking here, the majority of sales, the buyer's looking at it and saying, how much money is this going to make me? It's a money-making machine. So what are the priorities for a buyer when they're looking at a business, and what makes it attractive to the buyer? Well, obviously, a good PEBITDA, a good maintainable adjusted net profit. The buyer needs to be convinced that the profit in the business that's available for the owner is going to continue when they take over as the owner. What business category are we in? What sector? So again, depending on different sectors, wholesale typically tend to be a good sector to be in and fetch a good ROI. Retail tends to be not such a good category or sector to be in. Of course, there are always exceptions. And the client and customer profile. How many customers does the business have? How long have they been with the business? Is it transactional business where one-off sales, or is it recurring business? Is it only one or two big clients in the business? So the client customer profile is pretty key. And the owner's duties. This is another big one. When I come in as the owner of the business, I'm going to have to do, presumably, what the current owner does. So what does the current owner do in the business? And when I talk about roadblocks a bit later, then I'll be talking about the owner and why the owner can be an impediment or a roadblock to the sale. Other common factors for a buyer: what's the track record? As I said before, what was it doing before COVID? What's it doing after COVID? How did it get through that period? Are the key staff going to stay? Are the key suppliers going to stay? And are the key clients going to stay? So staff, clients and suppliers are big ones. And there's no guarantees on any of those. Sorry, I was just trying to think. I wanted to expand on one of those a bit. With the suppliers, it can happen where when the supplier knows that a business is selling, they may not give the new owner, the same conditions of supply as the current owner, because the current owner's built up a reputation, built up trust, may have a relationship with the supplier, whatever. Somebody new comes along, and so the supplier says, well, here's an opportunity to change the terms and conditions. I might put the prices up, I might shorten the pay periods and so on. But anyway, that's the traditional way it's been done, and I've covered that many times before. And you can find videos on my YouTube channel, on my website, and so on. And look out for my newsletter as well. But what lens are you looking through when you look at the business? Obviously, a seller tends to look at it as the business that they've owned for a long time. They see it how they've always seen it. A buyer can look at it different ways, and that's what I want to talk about now. That's what I'm going to talk about now. So if you Google Rembrandt, finding the Rembrandt in the attic, I can't give credit, unfortunately, to who came up with this term. There's various people on Google, and there is a book about a Rembrandt in the attic as well. So go and have a look. But my coach and friend Keith Miller in Melbourne had a presenter present about this recently. And just briefly, what it's about is, imagine you're buying a house. All right, so you know the house is worth about $1 million. You know other people are going to be bidding around about $1 million for the house, and so that's what you've got in mind. And you probably put a limit on how much you're prepared to go up to. But then you go and do an inspection of the house, and it's a very thorough inspection. You, unlike anybody else, get to go into the attic. And in the attic, you find a genuine Rembrandt painting that nobody else knows about. The owner doesn't know about. The other potential buyers don't know about it, but you know about it. So now, would you let yourself be outbid for that property? You would probably go up to whatever you needed to go up to get that property, because you know there's a Rembrandt in the attic. So it's a nice way of thinking about a business and thinking, well, do I have a Rembrandt in my attic in my business? And that's where, when I'm working with business owners, I look at these things and ask a lot of questions and get the owner thinking about, do I really have a Rembrandt? Now, there's an ethical thing here comes up as to, well, if I'm the buyer and I found that Rembrandt in the attic, do I tell the owner, oh, excuse me, but did you know you've got a Rembrandt in your attic? What's the right thing to do? That is a topic all on its own, ethics in selling or ethics in buying. So I'm not going to cover that now. So let's have a look at our buyers again, but this time they're strategic buyers. And let's have a think about some of the things that they're interested in and what's going to attract them to the business. Number one on the list there is client base. And this is often overlooked by many business owners that have been running their business, building their business up over years, have had clients, still got clients coming to them, and they don't appreciate the value that there is in that client base. And a lot of businesses, the gold is in the list, gold is in the database. For example, I had a training and development, business leadership and management, sales training, frontline management training, all that for 10 years. Now, when my business partner and I came to sell that business, what were we actually selling? We'd become part of a franchise. So we didn't own any of the intellectual property in the programs. We didn't own any of the process or anything. The only thing we had to sell was the client base, because plant and equipment, no, we had a training room with desks and tables, and we had a few computers and things like that. So thinking of that breakdown of the value in a business that I showed you earlier, the value in our business was almost all in the client base. But there are business owners out there that I work with that have a big database of clients, people that have dealt with them in the past, but they don't keep in contact with them. They may not even keep a good record of that client base. So, do you have a client relationship management system, a CRM? So a buyer, again, will look at it and say, well, what's the client base? And can I use that client base? So the buyer might be someone already in a business that's dealing with similar clients to your business. Now they can see an opportunity to sell more to that client base. 2016, I think it was, just check my notes. Microsoft bought LinkedIn. Now, I know this is corporate and big business, but the principle is the same. Microsoft paid $26.2 billion, apparently, for LinkedIn, and LinkedIn at that time really wasn't making much profit. What was Microsoft buying? They were buying the database. LinkedIn had 435 million subscribers signed up on their database. They now became part of Microsoft's business. They also got some key people out of it as well, who went onto the board of Microsoft. What did it do for LinkedIn and Microsoft? That database grew by 50% in 3 years to 645 million, and now Microsoft are selling other products. They've monetized it. So the value is in the client base. Another example of that is Dollar Shave Club. Now, I buy my razor blades through Dollar Shave Club. I signed up with them many years ago. What is it? They sell razor blades. So I get my razor blades through the mail once a month or once every 2 months, whatever I decide, and they come I don't have to think about it. It's paid on subscription. They started in, checking my notes, I think it's 2011. They got bought out in 2016 by Unilever, a big company that produce men's aftershave, men's care products and things like that. What were Unilever buying? They were buying this big international subscription database that Dollar Shave Club had built up. Again, Dollar Shave Club wasn't making much money at the time. And they sold that business for $1 billion. So Unilever paid $1 billion for it. And it took Unilever into the subscription home delivery business as compared to purely retail. So recurring revenue is a big one. We have an espresso machine at home. We've had it for years. It's built rock solid. It'll probably outlive me. It gets used every day. And it's sold pretty cheaply because Nespresso weren't worried about making a profit on the machine. They make a profit on the pods. We are still, to this day, buying pods regularly online for our coffee. So there's recurring revenue. Very important, very valuable, attracts buyers. Supplier contracts. Again, your business might have a contract with suppliers, which is difficult to get. It may have an exclusive for Australia or for your state. It may be a certain accreditation that it's got, and that may be attractive to a buyer that's got another business that wants to bring those suppliers on board. And again, some of this will change depending upon or become important how you sell the business and how the business is structured right now. For instance, again, this is covered in other webinars, but when a business sells, you either sell the assets, as I described earlier, or somebody can come along and buy your company if you have a proprietary limited company. They will buy the company. What's the advantage in buying the company? Well, then contracts with suppliers and customers will stay in place. If it's an asset sale, as I described before, then those are no longer staying in place. The same with key staff. When it's an asset sale, which is the majority of small business sales, then the staff basically leave one business and one employment and start with another one. So again, your setup and things now, these are all the things you need to be thinking about well in advance of exiting the business. Am I set up in the right structure? A month ago, I did a webinar where I had Stephen Brown, commercial lawyer from Lynn and Brown Lawyers. He talked about all those different structures and the pros and cons. If you're operating out of a trust, you may want to look at that and say, well, is this the best? It may be the best for tax purposes right now, but is it the best structure when I come to sell? Okay, key staff, joint ventures, network. Again, these are all things that can be attractive to a strategic buyer. I worked with a business, an IT business, some years ago. It was just purely based in WA. They built it up very nicely, 2 owners, partners. One was the business entrepreneurial type owner, and the other one was the technology guy who understood all the technology. They sold and got bought by an Eastern States company who wanted to have an IT presence for their other services and products that they sold in WA. And they saw the value in buying an existing business that had an existing client base, but also they were buying the technical guy. So one of the conditions of sale was that the technical guy stayed with the business at least for a period of a couple of years. And this is quite a common thing as well. When a business acquires another business, they want the expertise to stay in the business because that's what makes it different. So again, when I'm working with clients, it's looking at all these different things and looking at it through that different lens to say, well, where's the hidden value? What's the value in your business? Okay, keeping lubricated here. So what else? Intellectual property. Now, intellectual property is a big, big topic. And intellectual property usually comes down to 4 things: copyright, trademarks, patents, and secret business. I'll come back to that one. And I'm not going to talk too much about this. There are experts out there, and I'm quite happy to run a webinar and get an expert in. Actually, it's probably a good idea. Let me know in the chat if you think it's a good idea to have a session on intellectual property, particularly if you're in a professional services business like accounting or finance advice and things like that. Because you need to have something to sell, and intellectual property is something you can create and develop within your practice that makes your practice unique. And it may be content, material, or it may be processes and systems. But let's start. Copyright. All right, so if you're producing material which is definitely yours and can be proven to be yours and things, then you can copyright things, and copyrights have a value. And again, let's say it needs an expert to talk about some of these things. Trademarks. Do you have a trademark that's built up a reputation and a value in the marketplace? If you see a McDonald's logo, you immediately get an impression of what that particular premises are going to be selling, and it has a value. I mentioned franchises earlier. Franchises is all about the value of the brand. So a franchisor wants franchisees to be successful. Hopefully they do, and hopefully they help them, because it's building the value of the franchisor's brand. And when the franchisee comes to sell, and I've handled a few franchisee sales. I was a franchisee myself in the training business that we sold. You don't actually own a business when you're in a franchise. But again, you're selling the goodwill, you're selling the reputation. The trademark then has a value. So does your business have a trademark? Patents. This is a good one. I had a speaker speak to my business owners taking action group some years ago, and I get I get experts in and business owners in on a regular basis to talk about their experiences to my group. I'll talk about that group later. This particular guy with his business partner had developed a product for bicycles. It was a rear light with a camera in it and had a lot of uniques. Anyway, there's a whole story behind that. At the end of his presentation, he was asked the inevitable question, so did you patent it? And the answer was, no, we didn't. To patent something, you need very, very deep pockets, and particularly a worldwide patent. And it's a very time-consuming and a very lengthy process, very expensive process. And at the end of the day, if you need to defend it or you try to challenge somebody on the patent, you need even deeper pockets and a lot more time. And then somebody asked, well, did anybody ever copy your product? And he said, yep. It appeared as an Aldi special one weekend made in China. Now, in that situation, you can understand where he's coming from. Who would you challenge? Where would you challenge them? Aldi or the Chinese manufacturer? How are you going to? No, too hard, too expensive. His answer to that, or solution to that, was make sure you've got version 2 ready to go before somebody copies it. So when they bring it out, you've already got a better version on the market that you can put on the market. So it's an interesting one. And then you've got, I mentioned recipes and formulas. Again, these can be very valuable to business. Coca-Cola is the famous one, of course. You know, what's the recipe for Coke? Who knows? Who cares? I don't drink the stuff. It's good for cleaning very tarnished coins, by the way. You know, Colonel Sanders, and it's a true story. You can Google it. He had a petrol station, actually, a service station in Kentucky, and out of his living quarters, he started serving food. He started cooking chicken and steaks and stuff, and he became well known for the food. Then he ended up building and adding on a restaurant. The restaurant became very famous. He came up with a unique way of cooking chicken quickly and spicing it up and so on. I mean, it's a pretty well-known story. And it's also true that a bypass got built around his state, and he then was at retirement age, and it was, well, do I retire? What do I do? And he realized that what he had that was unique and valuable, his Rembrandt in the attic, if you like, was his recipe for the chicken. So he went out, he actually traveled the USA selling his unique recipe, which apparently is still a secret today. I don't know whether it is or not, but anyway, but you get the point. And then somebody gave him the idea of developing it as a franchise and selling it as a franchise. And the rest is history, as they say. So what have you got, or what can you create in your business? Can you widgetize something or develop something? You know, I've worked with a business that made soy candles. He sold it now, he sold it some years ago, but he kept formulas for all the different clients. A food ingredients business was a great business that after 2.5 years of working with the owner, I sold. I was still broking in those days, but a lot of the recipes so that they developed for Mrs. Max and Gage Rhodes and all sorts of people. And that was, you know, a lot of value in that. There was a whole lot of things that made that business pretty unique. Apps and tools, again, had a business owner a few years ago set up a car detailing business. So a bit like these that go around, and just trying to think of the name of one. We use one, and they come to your home or whatever, and detail your car. He developed it with a Uber-style app, an Uber-style app where you could just dial up. So if you're in the office, they dial them up, they come to you, do everything in the car park. It didn't use water, it was all environmentally friendly, the whole thing. And he built that up over years and went national in Australia with it, but then realized that the value in the business was in the app itself, not in the actual detailing business. And he then went off to North America and developed the app for trades type businesses and service type businesses to be able to buy and use the app. So, it's not always obvious, it's not always the financials. So it's all about giving yourself choices when you're looking at the value in your business, and when you're working, over years to build the business up, then look for those different areas in the business, particularly if you're in a professional services business, any business. What are the areas that you can build up that are not necessarily just about the financials? It makes the business more attractive. So go quickly now, because I realize that time is running up, but I wanted to spend a bit of time on that because it is an area where I find business owners tend to overlook some of that value in the business. But even if you've found all those things and you've got the business running profitably, there are some things that can scuttle the sale pretty quickly. So what are they? And I've covered this in more detail before. My number one is you. The business is owner dependent. Special knowledge, skills, and expertise in the owner's head. I often ask business owners, so what's your role in the business? And they tell me, and I say, so you do the quotes and the measuring up and all of this. And yes, because I've got the expertise. I'm the only one that can do it. Well, let me tell you, that's a problem. You need to develop a system for producing quotes, a system that you can train other people in the business to do. Excuse me. Running dry here. So yes, you need to develop systems and processes for other people to be able to do relationships with the clients, suppliers, staff, influencers. I've talked about that. You need to wean those onto someone else in the business. How many hours do you work in the business? I sold a wholesale business once, which was a fantastic business. Wholesales typically are very good. The owner only worked 5 days a week, Monday to Friday, only worked 3-4 hours a day, then diverted the phone to his mobile. And that was a very profitable, very easy to run business, and very easy to sell, and he got a good price for it. Having family members or friends in the business can also be a little bit of a trap. But again, talk to me, we can work out what to do about that. So it's you. My tips, how do you overcome that? Install systems and processes, key. You should do that anyway. Train others, separate yourself from the business, move key relationships, consider what's going to happen with family members who may stay in the business or may not when the time comes for you to exit. So number 2, declining profits. So again, some of these are pretty obvious, but you need to know your numbers. You got to know not just your turnover and profit, but you got to know which of your products and services are profitable. Are you charging enough? And yeah, just be a little bit analytical. I'm analytical by nature. As I said, I'm an engineer by training and by personality. So I like to analyze and dig into things. And when I'm working with clients, I like to dig into your numbers and work out what's going on in the business. Anyway, a bit more about that later. What's your cost of goods sold, expenses? So you've got your direct costs associated with the product or service you're selling, and then you've got your overheads and things that you're going to have as a matter of course, whether you sell anything or not. And that will give you your break-even point. Are your financials up to date and clean? I am still amazed in this day and age with all the apps around and all the bookkeepers around as to why now accounts are still very messy or not up to date. Again, when I'm working with a business owner, I go through the financials. It's one of the first things that I do. With my business ready for sale assessment, I start with the financials, and I'll come up almost without doubt with a lot of questions for you, which you need to be able to answer. Lots of get personal stuff out, set it up the way that you want it set up to run the business. And yes, again, going back to that structure that you're set up in, you know, what can I say? It just depends sometimes who advised you when you were setting the business up as to what kind of structure you've got. If you were advised by an accountant and it was a decade or more ago, then you were probably advised along the terms of what's going to save you tax. And that may not be, it may be a complicated structure. I've seen business deals fall through, quite big ones, because the structure's been too complicated. The buyer and the buyer's accountant could not understand the money trail. Okay, so again, have a look at your legal structure. So here's some tips. Know your numbers, know to increase value and so on. You will get a copy of this recording, by the way, so if I'm going quickly with some of these things, or you can just contact me and have a chat about it. Okay, poor processes and systems. Again, I've talked about that quite a bit. Think of your business as a franchise. If you were setting it up to franchise it, which is one way that you can sell it, then you need to have good systems and processes set up. Ray Kroc, who systemized and franchised McDonald's, watch the movie, it's very good. He allegedly said, if you have intelligent systems, you don't need intelligent people. The business will run, and certainly run without the business owner being there. If you have that concept in mind when you're working on your business, it doesn't need to be millions of systems. It doesn't need to be very time consuming. Again, you just need to know how to get started. Talk to me. I put their FDS example. One of the first businesses I sold as a broker was owned by a husband and wife. The wife was German by birth and certainly by discipline, and had systemized the thing to the business to the point where folders in the filing cabinet, that's when they had filing cabinets with folders in, all the personnel files were pink. On the computer system, the Explore files folders were also colored pink. Everything on the system matched what was in the drawers and so on. It was just so well systemized. And remember, systems save yourself time, energy, money, and stress. Again, a whole topic, and I've done webinars on this before. And what's the opportunity for growth? Buyers like to be able to see opportunities where they can grow the business. So a lot of buyers, and particularly strategic buyers, want to know that there are things they can do with the business to grow it, make it more valuable, add it onto their business, or sell it. Some people just want to buy a business, build it up and sell it, because as a strategic buyer, they can see the opportunities that the current owner hasn't. And when we're presenting the business for sale, we need to talk about untapped potential. Never do predictions or forecasts when you're selling a business, but you can talk about untapped potential and explain why the current owner hasn't taken it up. Okay, there's lots of other roadblocks. There's obviously factors outside of the owner's control, like local government, federal government, international happenings and things like that. These things all need to be looked at, but it's all about increasing the profit and reducing the risk to that profit. Remember, it's not about turnover, it's about leftover. So what are some of the businesses that are in demand, and what are some of the ones that are difficult to sell? So this has come from Business Values newsletter, the recent edition, July 2022. It does change from quarter to quarter. This is produced by the owner of Jarrett Business Valuations, Chris Milne, who I talk to quite often and who has done podcasts and webinars with me. You can find details at jarrett.com.au. But you can see there's some pretty obvious ones in that retail's not so good. Service businesses in the mining industry at the moment are doing pretty good if they're 5 days a week. Difficult businesses to sell. Again, you can look through those and see that they're pretty well things that you would expect. And when you come to sell, I'm going to look at my notes here, but I said before, it's about choices and options. There's more than one way to sell a business. Yes, there's the traditional way of selling the assets or selling the company. If you don't think it's going to sell, you can just run it into the ground, take as much out of it as you can get now. You can liquidate and wind it up, transfer it to a family member. Again, talk to me about that. You can take on a business partner and wean them into the business over a period of time. You can transition it to employees. If you've got employees, the business is big enough. And again, it comes down to financing and can they afford to buy it. You can sell it to a competitor. Think of the Microsoft examples. One that I didn't mention before, who gives a crap? Subscription models. I love them. We get all our toilet paper. This came out of the COVID thing where toilet paper ran out. We get all our toilet paper, tissues, kitchen rolls, everything delivered to the door through who gives a crap. Sorry, I just remembered that business. You can sell to suppliers sometimes. You can split the business up. There's umpteen different things that you can do depending upon how you set up, what the business is doing, and where the value is in the business. So that is something that I work on with my clients, either in a group or one-on-one process, and here's some action steps that you can start taking to improve the value and optimize the value and make it more saleable. So I'm coming to the end. But what you need to do is become a business owner taking action. Okay, it's often the start that stops some people. I'm going to change my glasses now so that I can read what I've got here. But document a plan. Have a plan. If you fail to plan, you plan to fail. It's an old maxim, but true. And I do it in a backcasting method. So start with the end in mind and work backwards is a much better way of building a business plan than trying to work forward. Look at your financials, look at your financial structure. Are you in the right structure? Are your financials clean? Are they up to date? Is it set up to tell you what you need to know about the business? And be specific in your planning. Don't use generalizations. And as I say, it's often the start that stops some people. So if you want to start and you want somebody to keep you accountable, hello, that's what I'm here for. So did I talk about the things that I was going to talk about? The first thing they tell you in public speaking, which is what a webinar comes down to, is tell them what you're going to tell them, and then tell them what you told them. So I'm telling you what I told you, okay? Business or job, yeah, we talked about that. Valuing a business very briefly and one way, but the most common way. Are your financials clean, set up, track buyers? I think I've pretty well covered all of that. I know some people could talk about intellectual property. Thank you, Stephen. I may come back to you on that one. And it is a big topic, and it's a good topic. So I will put that on my list to do webinars and podcasts on. I will make this webinar into a podcast as well. So obviously Audible, the audio version only, and you can subscribe to that. If you go to my website at johndenton.com.au, you can find my podcast library. You can look at back episodes, and you can subscribe. It'll give you a link where you can go to your favorite podcast player and you can subscribe. So how do you get started? Take action, engage me. I have a business owners group called Business Owners Taking Action. I've had it for many years. I'm starting a new group early in the new year, so you can sign up for that if you wish. Locally, we now meet, we've just changed to 1 month Zoom meeting to 1 month in person, and I get guest speakers and experts in to talk to the group sometimes, and we just work with each other to learn from each other, learn what other business owners are doing, what they're doing with AdWords, with their marketing, what's working, what isn't, and learn from other people so that you don't have to reinvent everything yourself. So that's the group process, and I do business ready for sale assessments. Sorry, I need some more water. As people know, when I have one-on-one meetings with them over coffee, I get pretty passionate about this, so I can get quite excited. But my role in life is to get business owners to think about all these things well in advance of wanting to exit their business or grow their business. And so I just love talking about it and love working with those people, with business owners. So you can join a Business Owners Taking Action group, get a business ready for sale. Assessment is where I start with most business owners. So I've got a few of those on the go at the moment, some very interesting and different types of business. I bring to bear all the experience that I developed over 12 years of business broking, selling everything from takeaway kebab business to a motorbike wrecking business to a food ingredient business, auto servicing business, wholesale businesses. I've worked with a lot, and I now talk and interact with a lot of business brokers about these things as well, and franchise businesses, which can be a challenge. So you can contact me through johndenton.com.au, email me at john@johndenton.com.au, and I look forward to having you on a future webinar or podcast. Thank you, and goodbye from me.